Alright traders, this is Mike from MS100. Tonight I do want to give you a little education movie on how to trade patterns and how to trade patterns as you see them setting up and not after the breakout. Now the reason why I trade patterns as they're setting up and not after the breakout is because I feel like the risk reward is a lot better when you actually see the pattern setting up and not after. So I do want to review some of the trend lines I have here on the chart with you. Okay, so I do want to review some of these trend lines as I was saying. This downtrend line here that's drawn in orange, that actually goes back to the highs in 2008 of March and the summer highs. This orange trend line down here is right around the 878 resistance level. Possible neckline on this head shoulders pattern. We have this black trend line right here, which is the other possible neckline, which is the slanted neckline on the head shoulders pattern. We got this black trend line up here, 930 resistance on the S&P, and then these purple trend lines show the falling wedge pattern that has formed in the S&P 500. Now, what I want to talk about is actually trading these patterns as you see them setting up. Now, as we talked about for the last couple of weeks, we saw the head, we saw the shoulder right here, sorry, the head right here, and we said possibly another shoulder is going to form. Well, we were looking for another shoulder to form, and instead of waiting for a head shoulders to actually break down, as we broke down below this neckline, but actually didn't break down below this level right here, we were looking for another shoulder to form, and we were looking for 930 resistance because it was at the prior shoulder over here. So a perfect time, as you're seeing the shoulder forming here, is to actually short into this resistance area of 930. And if you did short into this resistance area 930, you got a pretty good move down here. Now you notice we saw this possibly holding our neckline here, and we do have this trend line coming down here that we drew. And as we were coming down, we noticed, well, we got a little bounce here, so we decided to draw this purple trend line in here. And since we already had this piece of data here, we drew that other trend line. So this is what we were actually looking at right here. We were looking at this right here, and we said, oh, that looks like a fallen wedge. So what do you do on fallen wedges? Well, most likely fallen wedge is going to break higher. So you would normally buy the break higher. Well, what I do is I see the pattern forming in the market, and now that we're coming down to this bottom of the wedge pattern here, I would actually buy this move because one, we have support here, this orange trend line, and we have this other purple trend line here as support. So I'm taking a look at this, seeing support here in the market, and what even if what did happen to be a channel, most likely we're going to bounce off this level and move higher, even though it looked like this head shoulders moved down and we didn't get a low coming in here. So you would actually buy here at the beginning of the formation of the pattern, and as you see it here, the pattern does start to play out here, and we did get a rally higher and a breakout of the pattern. Now if you did buy that breakout, you did get a pretty good move higher, but your risk reward here wasn't as good as it was down here, because if we did break below both of these trend lines here and close below it, we would have just got taken out of the trade. Now up here, we could spike up intraday and you could want to buy it here, and you never know, the market could just turn around and come right back into this pattern and move lower. So you would probably want to sell some of your position as you moved up here into this purple trend line, and then hold on the rest and see what happens if we actually do close higher. Now I just want to show you how it's set up on another chart. Alright, this is a recent chart of AKAM, which is Acme Technologies. Now notice how we have this red trend line here, which started acting as support. In this top red trend line here, just started acting as resistance. Well, this is another falling wedge pattern, and you would want to buy this pattern down here by the lower trend line here, looking for a break higher, so you capture the move through the actual pattern and on the breakout. And this is how it played out right here. Moving forward, we are consolidating here around the support area, and if we do break and close below on this, you would get taken out of your trade. But this is a bullish pattern here, so you'd be looking for it to move higher. And sure enough, it does break out, and it does break higher through this formation. I'll get back to you with some more movies later.